Hello Mavericks, this is Imri and welcome to today's currency recap. It is April 4th. So today, as always, we'll be doing a review of the trading day. We'll be taking a look at some meaningful news that's come out today, taking a look at the broader equity markets and a couple key commodities as well. We're then going to look at our proprietary currency basket, see if there's any major news to close out the week, and then wrap things up by looking at a few setups and opportunities. All right, traders, let's get right into it. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. So if you are a technical trader with a technically based trading system, we want to meet you. So click the application link in the description below this video. Now let's break down today's market action. Starting off with some market analysis. So the news of the day is that US unemployment claims came in higher than expected, and stocks, whilst up for a little bit of time, reversed sharply midday and closed down. And the dollar was under a little bit of pressure, but turned around as well. We're going to examine all of that once we look at our currency baskets. So stocks down today, crypto up, oil up, and gold down as well. And when we take a look at our fiat currencies here, the Aussie dollar put in a good show today, as did the Kiwi and the yen. The dollar, like I mentioned, under a little bit of pressure, but the Canadian dollar was the biggest loser on the day. So as we look at our cryptos here, Bitcoin Cash up big, up over 8%, Bitcoin up over 4%, Ethereum closing in on 2%, and Litecoin up over 1% as well. The big news today is that we are now at a +2 rating with our market outlook. We've broken, apologies there, Mavericks, we've actually broken below the 20 period moving average, not the 50, but nonetheless, that does result in our +2 score, as we're still above the 20 period moving average. We're still above the 50 period moving average, and the slope of those moving averages is still positive. So taking a look at this chart of the S&P 500, closing on the lows today is I mean, that's pretty significant, it's a pretty scary looking candlestick for sure, and it's going to have people thinking very, very hard about what's going to happen tomorrow as we head into that non-farm payrolls report. Very interesting to see. And speaking of that NFP report, that is going to be the showstopper tomorrow. Expect fireworks, fireworks, fireworks. However, the unemployment claims came in a little bit higher than expected today. And we have seen some inflationary data this week that's suggested that there might be some abatement there, and that comes in from Wednesday's report of the ISM Services PMI coming in lower than expected. Okay, heading on now to some currency analysis. This is what our velocity scoring table looks like currently. I don't want to make too much of this, especially as we're heading into NFP, because all of this can become meaningless at the flip of a switch, which is very possibly what's going to happen tomorrow. So with that in mind, let's jump over to TradingView right now and see what's going on. So the yen, sold off sharply. We got very close to meeting this piece of unmitigated bullish order flow that I've marked out in the basket. We didn't quite tap into that structure, but we did create a very nice head and shoulders pattern right here, which then broke and led to a sharp decline, and we're now bouncing here. But this top wick is very interesting on this 4-hour candle in the yen basket. I'm very mixed on the yen right now, and I'm 50-50 on it. It's not a currency that I want to be touching tomorrow. However, the dollar definitely is. So you can see here, the dollar's had a sharp sell-off since the first of the month, and we found some support today and have subsequently rallied. Now, this is on a 4-hour chart. If we zoom out, the picture gets a little bit more interesting. So there were definitely some dollar bears here. They got their stops taken out. We had some dollar bulls join the action. They got taken out as well. That, in theory, clears the field right now. And I believe the next move for the dollar should be higher, at least to tap into where we were trading back in November 10th to the, to the 14th of last year. Next up is the Swissy. So we've broken lower, right? We took out the lows from December 14th, 2023, took out the low from November 3rd, 2023, tapped into this area of potential demand, and we have a nice bullish looking candlestick here. So the Swissy is a possible buy, in my opinion, if and only if the opportunity presents itself in the actual currency pair, in the actual currency pairs. Okay, so the euro broken this trend line. We've tapped into some unmitigated supply up here, meaning that there should be some sell orders ready to push the euro down. So we broke that trend line, and then we rallied back up. It's possible now that we are going to see further decline. Tomorrow's NFP is likely going to give us the larger underlying direction for the euro and the dollar. Okay, so with the pound, very interesting. So we're just trading sideways right now. It's going to be very, very curious to see whether some buyers can step in to take the pound above this August high, August 2023 high. But trading sideways, I'm not too interested in the pound. The loonie is the Canadian dollar. That is actually very interesting to me. So we didn't quite get right to where I thought we would. Missed it by a few ticks there, but the loonie looks like it's rolled over after grabbing some stop losses clustered up here. From an LE wave perspective, this does look so far like a three-wave rally, in other words, an ABC structure, and I would not be surprised at all to see the loonie weaken further. So dollar CAD is a trade that's on my radar, very much. Okay, so here's the Aussie dollar, spiked above today through this area of resistance, but stopped short of clearing the previous highs. As a result, we'll have to wait and see whether or not the Aussie dollar can continue performing. Same with the Kiwi dollar for that matter. So here we can see that the Kiwi dollar broke these lows here, and we're rallying, but we've given up a lot of the day's gains today, over half of them, as you can see from these daily charts. So one interesting thing that might provide a bit of a tailwind here to the commodity currencies, although I think the Canadian dollar is in a slightly different situation because of worsening productivity, but a boost to the Aussie and Kiwi dollars could be commodity performance, and commodities have certainly been doing very well of late. So my glance through the baskets, has pointed out a pretty clear trade in my opinion. I really like the look of dollar CAD here. So that is something that I'll be keeping an eye on, especially as we head into tomorrow's employment data reports coming out of both the US and Canada. So on a 1 hour chart here, you can see that we found some support here earlier in the day, right around 10 a.m. And if I just draw some quick fib levels on the dollar CAD pair, you can see that we have a ways to go before we tap into the 30.2 to 61.8% Fibonacci support area. So that would be this area roughly, and that's where I would expect prices to tap into, hopefully in overnight trading, and that, in my opinion, can set the stage for a very nice rally in dollar CAD tomorrow. So that's kind of the trade I'm keeping an eye on. I don't really see an easy way to short this currency pair. I think playing the long side is a little bit more attractive right now. However, if I did want to build a bearish case, here's how I would do it. So we took out this significant high, emboldening buyers to step in, and then there is some overhead supply here that we've tapped into. So it could be that today's high marks the high in dollar CAD if I had to build a bearish case, and we're just going to come crashing off tomorrow, taking out today's 10 a.m. low. All right, so that would be the bearish case. The reason I don't like the bearish case as much is because if the bearish case is in effect, then there just isn't a lot of room here for dollar CAD to continue trading higher so that you can grab a decent price for those shorts. And if you wanted to short from current prices, you'd have to have a fairly wide stop loss above these highs here, and you'd at least be targeting those lows, so the risk-reward proposition isn't that great. On the other hand, if we trade lower somewhere like this and we can target the prior highs, that gives us close to a 3-to-1 trade with a very high probability of working out. All right, traders, hope you enjoyed that currency analysis right there. So in conclusion, we do want to play relative strength and weakness, but with tomorrow's news events coming up, we especially want to follow our proper position sizing models and ensure that you're following your trading plans. Do not chase the market tomorrow. Make sure, first of all, if you have it in your trading plan not to trade news, then you're not trading tomorrow, probably. However, if you do have it in your trading plan to trade news, make sure you stick to that plan. Do not chase the volatility that I'm certain is going to explode tomorrow. All right, pick your shots very carefully. With that said, see you guys next week. Bye for now.